Hi, good morning. Welcome back to another episode of Borak Bersama Maybank. Today, we've got a very interesting topic where we're talking about the latest Asia merger. And joining us today, we have our aviation and gaming sector analyst, Mr. Samuel Yin. Thanks for being here, Samuel.
Morning, Najib. It's good to be here.
Morning. Okay, all right. I see that you have restored both Capital A's and AAX ratings to a buy. But before that, can we get into why you upgraded these two stocks?
Right. First, I'll speak a bit about the mechanics of the merger. Essentially, AAX creates a new list called AAG Group, or AAG. And then AAX transfers its listing status to it and carries out a one-to-one share exchange. For their troubles, the AAX shareholders will receive one free AAG warrant for every 2 shares. And then AAG itself will acquire Capital A's 5 airlines for 3 billion ringgit via the issuance of 2.3 billion new AAG shares at 1 ringgit and 30 cents each. Now, out of the 2.3 billion shares, 1.7 billion will be distributed in specie to Capital A shareholders. In the end, AAG will basically own all the airlines in Capital A and AAX's stable currently. And Capital A will be left with 18% stake in AAG and the non-aviation assets. There is a private placement of 1 billion ringgit in the pipeline for AAG, but that is a bit further down the road.
Just for the gist of it, AAX, or AAX as we know it, will now be renamed and listed as AAsia Group, and it will be jointly owned by Capital A and Capital A's existing shareholders and AsiaX existing shareholders because of the swaps and all that. So now we've covered what's going on this exercise. Let's talk about the outlook of the companies themselves. Let's start with Capital A. I think they are no longer the listed entity with the aviation business. I understand that company will now be offloading its access to its AAsia Group. But won't that lower the company's earnings moving forward? Would that be a concern to investors?
Yep, you're right, Najib. Capital A will not have much earnings going forward. Having said that, Capital A shareholders will still be exposed to the airlines through their AAG shares. Now, the whole idea of this transaction is to lift Capital A out of its PN17 classification. Believe it or not, Capital A's balance sheet will swing from a huge negative shareholders' equity position of almost 9 billion ringgit to a positive shareholders' equity position. This is very important as a positive shareholders' equity position is a prerequisite for Capital A to have its PN17 classification lifted. The PN17 classification has, been the proverbial albatross hanging around its share price for the better part of 2 years already. So the prospect of having its PN17 classification lifted compels us to restore our buy call on Capital A. Going forward, there could be even more upside as Capital A intends to list its MRO and Super App divisions, so more value could be unlocked in the future.
All right, thanks, Samuel. Now, lastly, with AAX, you mentioned that it's a surprise winner. Why is that?
Right, AAX shareholders will have a stake in AAG that will include Capital A's more stable short-haul airlines. Demand for Capital A short-haul flights has always been more stable than that for AAX's medium to long-haul flights. Right, so when all of Capital A's aircraft return to service, the enlarged AAG's group earnings ought to be more stable than AAX's currently. So we believe that the investing community will ascribe more generous valuations to it. Over the last few days, I have been asked if I had only one choice, which stock should investors buy, Capital A or AAX? An easy way of looking at it is this. An AAX shareholder will receive one AAG share and half a free AAG warrant for every AAX share. On the other hand, Capital A shareholders will receive only about 0.4 AAG shares for every Capital A share. True, Capital A has non-aviation assets like the MRO, Super App and Logistics divisions, but it will take time to unlock their value. The free AAG warrant that will be issued to AAX shareholders can be monetized much more quickly. So I am inclined to say that this merger actually favors AAX more than Capital A.
Thanks Samuel for joining us today, and that's all the time we have today, folks. We can catch Samuel's report and many more trade ideas on the all-new Maybank Trade app. Remember, if you do not have a CDS or trading account, you can apply for one online in just 3 minutes via the QR code that we are going to put on here. If you need more human touch, you can also approach our sales representatives and they can help you get started on that as well. With that, I'll catch everyone in the next episode, but until then, this is Najib Hussain signing off.